and welcome to the weekly PennEnergy Petroleum News Update. I'm Stacy Schmidt. The price of oil has climbed above the $100 mark on the NYMEX, supported by a drop in inventories in the U.S. Trading largely based on fluctuations in the U.S. dollar, the price of oil has been elevated by violence in the Middle East and North Africa. Despite the recent decline in oil prices, gasoline prices have remained elevated in the U.S., with most states paying near $4 a gallon. Spurred by this, President Obama recently expressed support for increased oil and natural gas production in the U.S. by ramping up leasing in the Gulf of Mexico and Alaska, as well as further evaluation of exploration, development, and production offshore the East Coast. U.S. independent Noble Energy has stopped drilling and abandoned an appraisal well in the Leviathan natural gas field offshore Israel in the Mediterranean Sea. The company revealed that water was flowing from the wellbore, caused by a water sand that flowed behind the surface casing. The much-anticipated well was being drilled to better determine the size and characteristics of the Leviathan natural gas well. Continuing its appraisal program, Noble Energy is moving the rig and planning to drill another well in the Leviathan formation. In shale news, Chesapeake Energy has resumed completions operations in Pennsylvania after finishing investigations into a well blowout in the Marcellus Shale in April. Chesapeake voluntarily halted all completions operations, including hydraulic fracturing, in Pennsylvania while the company worked to understand the causes of the blowout in Bradford County. The investigation concluded that a valve flange connection to the wellhead failed, causing fluid to be discharged at a high pressure and resulting in a blowout. In an emerging shale market, French major Total has joined supermajor ExxonMobil in two unconventional natural gas leases in Poland. Located in the Lublin Basin in southeastern Poland, the two exploration blocks cover more than 2,000 square kilometers combined. Seismic has already been acquired and one well has been drilled. In the immediate development plans, the companies will evaluate the drilling results as well as drill another exploratory well. U.S. independent Anadarko Petroleum has signed two 5-year contracts with Diamond Offshore for the currently under construction ultra-deepwater drill ships, the Ocean Blackhawk and the Ocean Black Hornet. With the rigs expected to be delivered from the Hyundai Heavy Shipyard in South Korea in 2013 and 2014, the combined drilling contracts are worth $1.8 billion. With the new contracts, Anadarko and Diamond have mutually agreed to dismiss all claims related to the Ocean Monarch semi-submersible, for which Anadarko declared a force majeure due to the deepwater drilling moratorium in the U.S. Gulf of Mexico. Thank you for joining me this week for PennEnergy's Petroleum News Update. For these stories and more, visit PennEnergy.com.